Welcome back to Alpha Recap, your post-close rundown of the market's biggest sector stories. We're coming to you after the bell with the highlights from today. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Today felt like a rotation day more than a pure risk-on or risk-off session. Energy and media led, crypto and real estate lagged. Lots to unpack.
So, what really stands out here is the blend of hard event news and longer-term themes. Geopolitical friction and an OPEC surprise tightened oil markets. And at the same time, AI and ad sales headlines were supporting media and parts of tech.
Exactly. Markets closed with a thematic rotation. Energy finished as the top sector, communications and media did well, utilities got a lift from storage contracts, but crypto and some real estate names underperformed.
Let's start with the big mover, energy. Benchmark crude reacted to shipping disruptions near the Strait of Hormuz and Panama Canal congestion. Oil climbed roughly 3 to 4% intraday before settling up on the day.
That pushed energy names higher across the board. Exploration, midstream logistics, and anything tied to geopolitically sensitive barrels saw relative strength. Analysts note that a tighter physical market impacts margins and creates short-term price pressure.
Right. And the other thing is, renewable and transition-related headlines showed up too. South Korea announced a 3-gigawatt floating solar plan, and there were U.S. pilot projects. So some companies with dual exposure to fossil fuels and renewables outperformed pure upstream plays.
I mean, when you step back and look at this, investors are starting to treat energy and utilities as connected exposures to the energy transition rather than totally separate bets. Storage deals and solar contracts matter now.
Speaking of storage, utilities got a boost from large sodium battery commitments and progress on grid market mechanisms like EDAM. That reduced offtake uncertainty for developers and lifted storage contractors and some materials plays.
Yeah, that tracks. Those binding commitments shorten project timelines and help with permitting risk, which investors rewarded today.
Communications and media was another outperformer. YouTube reported stronger ad sales. That ad line was a high-margin driver and pushed ad-reliant platforms and distributors up by mid-single digits in many cases.
Content catalysts help too. Festival and studio news, streaming schedules. Analysts note that better-than-expected ad demand suggests digital ad markets still have room, even with macro noise.
For listeners tracking numbers loosely, call it mid-single-digit gains in many media names today. Not a blowout across the entire communications complex, but a meaningful push in ad-exposed names.
Now, on the downside, crypto and digital asset-related equities lagged. Despite adoption wins like broader payouts and payment integrations, governance issues and security incidents kept a lid on sentiment. Bitcoin traded down roughly 1 to 3% on the session.
Honestly, I was a bit surprised by this one.
There's a real gap between increasing utility, like payments integrations, and unresolved policy questions. Data suggests that regulatory uncertainty keeps volatility elevated for coins and crypto-exposed equities.
Real estate underperformed as well. Liquidity-sensitive REITs and office and retail-exposed names traded cautiously amid Fed uncertainty and some mixed transaction headlines.
Finance and banking were mixed too. Mergers and deal chatter supported pockets of activity, but a notable ETF operational stumble and oil-driven macro concerns weighed on sentiment across the group.
Short reaction. Wow, big rotation.
Not what anyone expected.
Let's shift to cross-sector themes. Those help explain why some sectors outperformed while others lagged.
First, geopolitics. Shipping friction near the Strait of Hormuz and Panama Canal congestion tightened physical supply, lifted crude, and indirectly pressured rate-sensitive sectors through higher insurance and shipping costs.
Second, AI remains a multi-sector accelerant. YouTube ad performance, product updates from major platforms, and AI-driven upgrades in industrials and retail all showed up in the tape.
Third, the energy transition connected utilities, energy, and materials. Battery contracts and solar deals pushed related contractors and materials companies, especially those involved in critical minerals and recycling.
Fourth, regulation. Cannabis saw some upside from federal rescheduling chatter and a new DEA registration portal, but congressional pushback keeps the story uneven. Crypto faced adoption headlines offset by governance and enforcement risk. Tech had fresh funding but also renewed probes.
And fifth, deals and funding mattered. A reported pact in the materials space, about $850 million for cobalt, plus an ongoing IPO process in mining and fresh AI funding rounds lifted specific names.
Let's walk through the day's most significant moves and why they mattered.
Number 1. Energy. The oil rally was driven by shipping disruptions and Panama congestion. That raised short-term logistics premiums and benefited producers in tanker plays. It also nudged inflation risk higher for fuel-sensitive sectors.
Number 2. Communications and media. YouTube's ad beat suggested resiliency in the ad market. Ad revenue flows into free cash flow for many media conglomerates, so analysts viewed the signal as supportive for growth and margins.
Number 3. Utilities and storage. Large-scale sodium battery commitments and market reforms like EDAM reduced offtake uncertainty, which is a meaningful de-risking event for storage developers.
Number 4. Cannabis. The new DEA portal and rescheduling chatter provided incremental legal clarity, which could matter for banking, tax treatment, and institutional interest, but there's still a lot of congressional uncertainty.
Number 5. Crypto. Adoption wins like expanded stablecoin payouts and payment integrations were real, but governance and security incidents kept risk premia elevated. Bitcoin's modest decline reinforced that pattern.
Number 6. Finance. Deal-making and a few idiosyncratic events, including that ETF glitch, created both pockets of support and headline-driven worry, particularly for liquidity-sensitive products.
Number 7. Tech. Fresh AI funding and product updates provided upside, but regulatory probes balanced the tape. So the sector was mixed overall.
I mean, when you step back and look at this, the market was more about rotation than a single directional bet. Investors were shifting exposures based on concrete news, shipping, ad trends, battery contracts, rather than piling into everything risk-on.
Totally. Analysts note that thematic differentiation is stronger now. Companies that could point to firm offtake contracts, demonstrable monetization, or resilient cash flows got rewarded. The rest faced headline-driven selling.
Quick practical takeaways for listeners. Observational, not advice. Monitor shipping lane updates and tanker rates for oil sensitivity. Distinguish energy names with transition exposure from pure upstream producers. Follow regulatory timelines for crypto, cannabis, and AI.
Also watch ad revenue cadence for media names and track battery supply chain announcements and permitting milestones for storage projects. And in finance, keep an eye on ETF operational notes and liquidity events.
Short reaction?
Right. And another small but important point. Deal flow often lifts small and mid-cap names within sectors more than indices. So sector leadership can hide a lot of nuance at the stock level.
Let's highlight the near-term watch list, the items that could move sectors in the next few days. First, any official DEA rulemaking or congressional movement on federal rescheduling and registration portals for cannabis.
Second, shipping updates for the Strait of Hormuz and Panama Canal throughput statistics. Third, follow-up numbers on YouTube ad sales and quarterly ad guidance from major platforms.
Fourth, battery supply chain announcements, permitting milestones for large storage projects, and any EDAM-like market design rollout news. Fifth, regulatory filings or trial outcomes touching crypto and large tech firms.
And sixth, of course, company-level earnings and guidance in energy, communications, utilities, and materials from names that reported today or that are scheduled to report soon.
Before we close, one more theme worth calling out. Regulation compresses risk tolerance. Whether it's cannabis, crypto, AI, or content moderation, unresolved policy adds a volatility premium that investors are explicitly pricing.
Absolutely. The market rewarded clarity, concrete contracts, clear revenue signals, binding offtakes. It punished ambiguity. So policymakers and regulatory calendars matter for positioning right now.
It's almost like the market became a policy calendar manager today.
Short reaction, big move.
Okay, time for our concise takeaways. 1. Today's market was defined by rotation, not a broad risk-on or risk-off swing. Energy and communications led on headline-driven momentum.
2. Geopolitical shocks around shipping lanes re-rated energy risk premia and added short-term inflationary pressure for fuel-sensitive sectors.
3. AI headlines and ad sales strength-supported media and certain parts of tech and industrials, but regulatory scrutiny kept the broader tech story mixed.
4. Battery contracts and grid market progress tied utilities, materials, and storage plays together. Investors are increasingly viewing those as linked transition exposures.
5. Regulation remains the wild card across cannabis, crypto, and AI, so monitor agency actions and hearings. Headlines will move prices.
Final reminder, this is informational only. Analysts note these themes and data points, but this episode does not constitute personalized investment advice.
Thanks for listening. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
We'll be back after the next close with another sector recap. Until then, stay curious and keep tracking the headlines.